I want to take that conversation to our guests, Kush Bora and Parag Thakkar, of course, join in. And we'll talk about a clutch of others. Because even in power, Alex, as I think a message from Parag only suggested, or maybe otherwise I read it somewhere, that in select cases, promoters have started buying. Is that, are people saying that, okay, the correction is overdone, if you will? But just one quick question. You know, wind power, wind equipment, it's an interesting point if CEOs are coming out and saying that no matter what happens, it will not go above 5 megawatts per annum, whereas the expectation was that some point of time it will reach maybe 8 or 10. Does it cap the valuations, Parag bhai, of a Suzlon, Inox Wind and everybody else in that ecosystem?
So basically, I don't have these stocks in my portfolio.
Which is fine.
Basically, I have a limited knowledge on this entire renewable theme. But I generally don't buy into narratives. I see cash flows. I am a cash flow lover. I don't believe in narratives till they actually convert themselves into cash flows. And as he also very rightly pointed out, you know, there are some targets which are set by government, but there are some challenges also on the ground. And so he rightly pointed out that land acquisition is a challenge in wind equipment, wind business. So definitely I will be also cautious. And generally it is not my nature to go with the narrative.
Okay. So then, but the data point that Neeraj was just mentioning, which is promoters going out and buying, have you been witnessing this?
Yeah. That's an interesting trend which I see. Three things which have turned positive in the market, which is completely unnoticed by markets. One is dollar index turning from 110 to 106 now. Correct. The second is that government is taking its steps. They boosted consumption in the budget. Now government spending has started. RBI is doing its bit by infusing liquidity at every, whenever there is a shortage of liquidity, they are there to provide liquidity in the system. They cut repo rates to boost consumption and private sector capex. And now the fourth thing has come, which is promoter buying. See, at 26,000 when we were actually selling in the market, a lot of promoters were also selling and PE funds also were selling, right? Now, after a long time, in this mid-cap and small-cap correction, I am seeing promoters buying. First, just to give you one example, and this is a stock which we own in the portfolio, Jindal Steel and Power. Now, promoters have bought worth 790 crores in last 10 trading sessions. Okay, it's a huge, I would say, faith, because they know, and if you see their earning call, they have said clearly that in whatever they have said is that their capacity is going from 9.6 million ton to 15.8 million ton in 3 years. And so, this is with backward integration which will improve margins. So, their EBITDA will go up from 9,000 crore to around 16,000 crore by FY27. Correct. And current market cap is 89,000 crore, net debt is 13,500 crore. I would say that if they actually do 17,000 crore EBITDA with backward integration, which is structural EBITDA, then they can give 8 times, you can give 8 times to them. So 1,36,000 and net debt is not rising too much. One interesting thing again they have said on the call is net debt to EBITDA will not exceed 1.5x in spite of 60% capacity addition. So that gives you a 30-40% upside on the table. Yeah. A small developer, I'll tell you, recently listed developer like Arcade developer, the promoter is buying. TVS, the new recently listed company, TVS Supply Chain Solutions. Promoters, TVS Motors has bought 88 lakh shares from the market. So there are interesting things happening when in this fall of the market where promoters have started buying, which is a great news for me because promoter knows the intrinsic value of the business. Promoter is excited. Now, why JSPL must be buying? Why promoter is buying? They know that their projects are now going to commission and every quarter there will be improvement in the volumes. And if prices supports, and if you must have read the Tata Steel, Mr. Narendran has also said that at this steel prices, it is very difficult to put capex, which will cap the capacity increase. Plus, if government does something on safeguard duty, it's a shot in the arm.
Okay, so we'll talk about all of this. But viewers, I urge you, do not go out and buy a stock just because the promoter is buying. You need to study it. Because there are a clutch of names wherein promoters have been buying for 6 months and the stocks have come off. So please do your own due research. Do not buy it because a promoter is bought or because it's being discussed out here on television. Forget our channel. Anywhere. Please do your own due diligence.
It's not for trading.
It's not for trading for sure. No, we are from an investment perspective.
Intrinsic value, understanding wise.
Yeah, but sometimes the promoter may also go wrong. So please do your own due diligence. That's my limited request.
We've spoken about this already, but I think we should delve a little deeper into these latest RBI norms on the foreclosure or prepayment of loans. It could have implications on competitive intensity in the space, and my colleague Somit has just pulled up some data. He said that floating rate MSME and loan against property form as much as 27% for a few NBFCs, and you could see reduced product profitability in the space on account of this. Remember, no foreclosure means that you as a customer could be approached by another lender, and shopping for loans becomes easier and more lucrative for you and indeed for aggressive lenders as well. Do you see that as well, sir? And do you see the competitive intensity reducing NIMs for certain players?
See, already NIMs will be under pressure because of the repo rate cuts, right? So, that is a known negative for banks, right? Because deposits will get repriced at a lower rate at a later date. So, 1 or 2 quarters of NIM depression is given, and then depending upon how deep or shallow the rate cut cycle is, right? So, this is a very small factor in my view. But I recently attended Federal Bank's analyst meet, and where I was super excited with the CEO's clarity on improving NIMs in long run.
Okay.
Once this entire pressure around rate cuts stabilize, I think his focus on improving CA within the CASA thing, just by focusing on their own customers.
Sure.
So I think, and at 1.1 times FY27 book value
It
and
looks
10p, it's a great buy.
Very, very quickly before we go to the next conversation, very quick. Anything that you find worth buying in the financial space? Bajaj Twins looked interesting a couple of weeks back. What does it look like, Kush?
On the banks, I think HDFC Bank and ICICI Bank both are at the 200-day moving average support, and we've seen them rebound in the past, so that will definitely be on my radar. Friday also, when the entire banking lot was under pressure, HDFC Bank saved Bank Nifty, some further blemishes. Bajaj Finance, yes, but I think they've run up quite a bit, so consolidation is par for the course. If it does hold up above the 8250 level today, then Bajaj Finance for a second round of buying from here on could be considered.
Okay, now more conversations, and Mr. Indrajit Mukherjee, Vice Chairman of Texmaco Rail and Engineering, joins in to talk about everything that is in that bucket, maybe Outlook 2025 as well. Mr. Mukherjee, great having you. Thanks for joining in. Just around market open, so we might have a short time, but I would love to get your perspective, sir. The street seems to be a bit, how do I say, cautious about the prospects for the next 12 months post the budget announcements. Put into perspective how Q3 was for you, and how do you expect, more importantly, 2025, calendar year 25 to be for you in light of the recent budget announcements?
Hi, good morning to you, and I'll make it very short. I think, let me respond to your second question first. We had a pretty good third quarter. Despite all the challenges in the supply chain, there were some critical components were missing, but we still were about 49-50% over the same period last year, where PAT has gone up, the EBITDA is inching up, and it's been about almost double of same period last year. Coming back to your next, let me also go back to the first question to say that our numbers are almost flat despite all the problems that we had in the productions of wagons. But coming back to your second question, I think you have used a very, very appropriate language, appropriate word, by saying one has to be very cautious. I have to do some speculation here. And the speculation is that the railway capital allocation has been kept the same as last year, and yet government is looking for higher freight loading and at least an 8 to 9% higher revenue coming from the freight. So, I know there are restrictions of congestions on the tracks, but I think in order to make that to happen, it's going to be giving us, there is a bit of encouragement, and we see light for the future, because the wagon procurement has to go up to do this 8%, because there are always some wagons go out of service. Plus, there are lots of private players like steel producers and iron ore producers, coal producers, cement. They all want their private wagons. So I see a tilt of orders moving from the Indian Railway to the private players trying to buy wagons.
Got it.
And of course, it's going to help us in our rail construction and our electrification wing.
Mr. Mukherjee, you're giving us fantastic headlines when you say that Texmaco Rail is looking at light at the end of the tunnel. But having said that, give us a sense of the order book. You stood at 7,600 crore at the end of December. Give us a sense of execution heading into 2025, and how much do you expect this order book to grow?
See, this order, the number of wagons that we are making is much more than the wagon intake. So obviously the number of the order book or number of wagons are incrementally diminishing, but we are also with many inquiries which have come to us, which are from private sector as well as from the export segment. In fact, I'm very happy to say that we have bagged a substantial export order from Africa just last week. So I think at the end of the day, I wouldn't say it's a par for the course, but I think as time passes, we will be able to gather more order. In any case, our order book is full for the next 1 year and 3 months. So about 15 months, we are already full on the wagons. Same is in the electrification side. EPCs started doing well, and we are making good amount of money in the electrification. EPC, which is rail construction, we are looking into some various value-added areas to move in. It's still too early to say, but I think we will move into some very strong areas which will give us a strong boost to our EPC business. So all that I can say, the market is speculative, very difficult to say what's going to happen, but I like to remain optimistic.
Just one final question, Mr. Mukherjee. Because you've done so well, right, in the last 18 odd months, could it be a year of consolidation, or could it be the year of an encore of the growth rates that we've seen in the last 12 to 18 months? Just trying to...
It is a major consolidation period for us. As you know, that we also have acquired a company from Baroda, which is the Jindal Rail, which brings in lots of design development. So it's a year of consolidation and also a year of differentiation for us. We want to be different. We want to bring in some unique selling proposition. And that's the reason you must have heard, you must have seen that we have signed up an GCC as well as a design development agreement with Trinity Industries, which is the largest in the world. Trinity is from the US. So I would say it's a consolidation period while adding on to bring in more differentiation to our business portfolio.
Okay. Mr. Mukherjee, we wish you all the best for that. And during this consolidation period, may it strengthen your internals even more than what you anticipate. Thank you so much, sir, for taking the time.
Thank you, Neeraj and Alex, both of you. Thank you very much.
Well, that's cautiously optimistic Texmaco Rail, but all of these stocks have really come off. Parag bhai, this wasn't a narrative really. I mean, they showed in the numbers, the order books, etc. People touted this to be a 15-year story. Somehow this budget has disappointed the hopes of a few people. Is this correction an opportunity to buy into some of the select railway names?
Maybe. I'm not, but from the key takeaway from me from in the budget was that after 10 years, they are focusing on consumption and putting more money in the hands of middle class, who will spend on autos or FMCG or deposits. And so for me, and generally, if you see the FMCG pack, the auto pack, they generate free cash flows, they generate high ROCs. So it's a good investable pack for us. So I'm focusing more on that and playing infra through L&T and Jindal Steel and Power kind of names. And of course, financials will play the entire thing. For example, there was no focus on, there was no talk about housing in this budget. Yeah. But for example, we own companies like India Shelter and Navas Finance.
You also own Federal Bank, if I'm not wrong.
Yeah, Federal Bank, yeah, 100%.
There was an analyst meet, Parag bhai.
Yeah.
What do you make of it?
So basically, long
sorry,
term,
if we have spoken about it.
We did.
Okay, sorry. But long term, you're constructive.
Long term, very constructive. The focus of Mr. Manian on improving ROI in long run and NIM and profitability, as I said, by focusing more on car within their same clients, and by focusing, and remember, Kotak Bank has expertise in lending to tractors and construction equipment and CV, which was not there in Federal Bank. So which Mr. Manian will bring over next 2 to 3 years, and ROIs will gradually improve in spite of the near-term pressure. on margins because of the repo rate cuts.
Interesting.
And one thing which I would like to say that I was talking about is housing finance companies. These housing finance companies who are lending in tier 2, tier 3 cities, they lend at 14-15%, right? And their cost of fund is below 9%. They earn good spreads. It's a completely secured book. And something like India Shelter, which is available at just 2 times FY27 book and 13 PE. And if you see, the growth rates are 30-35%. So these are very interesting names in, I would say, and of course with the disclaimer, these are all long-term views and these are all stocks in our portfolios. It's a big disclaimer, and markets are very reckless, as Neeraj said. You know, it will be not good for anybody to just go ahead and buy the stocks just because of my recommendation.